WCTC. Call Jersey Central at 732-545-9282. Toll free at 888-545-9282. Watch Jersey Central live online at WCTCAM.com or listen on your smartphone with the iHeartRadio or TuneIn apps. Connect with WCTC on Facebook, Twitter, Instagram, and YouTube by searching 1450 WCTC. And now back to Jersey's Morning Show, Jersey Central with Bert Barron.
8:37. We're back on Jersey Central on the new talk radio WCTC, the voice of Central Jersey. It's Bert. Happy Friday morning to you. Forecast coming up at 8:45. Latest on the snow that's moving our way. We'll get a traffic update from Tom Colangelo as well, and we got a bunch of need-to-know things to share with you coming up. Well, if you're someone who pays taxes, and you probably are, there's some serious things you need to know as well. My guest on the Jersey Central Newsmaker Hotline is here to talk about some things that might go overlooked in terms of some last-minute strategies and maybe some things that could do to maybe reduce the sticker shock when it comes time in April to pay those taxes next year. There's a lot of changes in the works, and joining me with some information just to kind of make sure that we know what we need to know. I want to welcome in Roy Levine, who is with me here. He's a member of Levine, Jacobs and Company, here to share some good information. Roy, good morning. It's Bert Barron. How are you?
Good morning, Bert.
With you being an American Institute of CPAs, and we'll talk about some other things in a second. I was talking in the last segment about Bitcoin. For the life of me, I have no idea and no concept of Bitcoin. Is this something that the financial world and the fiscal world is going to sit up and take serious notice of in the new year?
They're going to try. Unfortunately, it's basically a question of whether or not it's going to be legitimate in the long haul. Eventually, we're going to be going to digital currency, but it's too much of the Old West right now, and there's no surety in any kind of investment in Bitcoin. So a lot of people are making money, but a lot of people are going to get caught on the short end of it. It went up today, I believe, from about 11,000 to 18,000 and dropped real quick.
Wow.
So it's all speculative, and God knows if anybody's really going to walk out of this. I hate saying that it could be a Ponzi in the long run, but they just got hacked, one of the companies that was dealing in it. So it could be a rough go if anybody wants to make quick money.
All right. For our purposes, then, we'll call it a work in progress, and we'll see what the future holds. But some things that maybe we have a better grasp on. If you could talk about, Roy, about non-cash contributions. That's something that a lot of people do, and it's out of the goodness of your heart. You know, donating clothing, maybe other donations of things that are appreciated stock. Maybe if somebody wants to donate things like that. There's so many changes that it's really hard to keep an eye on. What do we need to know about things like non-cash contributions?
Okay. In the case of, as you were saying about appreciated stock, if you were going to donate stock, first of all, you should hold it. It should be long-term stock that you've had, which means you've held it for more than a year, which means a year and a day. At that point, what you're doing is you're getting in touch with your broker and also your charitable organization and having them designate that particular stock for the sale. What happens is if you physically sold the stock, cashed it in, and then donated the cash, you would still have to pay tax on that gain. If you do a direct transfer as a donation, you don't have to pay the tax, and you get the full fair market value as a donation as opposed to your cost. If it's a short-term stock, you don't get the step up to fair market value. You're only donating your cost. So that's one thing to watch out on.
Yeah.
As far as clothing, the old routine where you're throwing it into that box in the supermarket, the problem with something like that is you're supposed to get a receipt, and a lot of places, even the Salvation Army, give you a blank receipt, and you're supposed to fill out information. Technically, anything over $500 in clothing that or household items, they first of all have to be in good or better condition. The other factor is that you have to have some kind of listing and it can't be for the full fair market value. I shouldn't say fair market value. It's what it is as the time of the gift or the donation. So what happens is there are lists that are you can look in certain publications as far as values for suits and clothing, etc. That is obviously after a depreciated amount. So if a suit that you bought for $250 is now worth probably $25 a piece. And you can make a listing of it. What I would suggest is taking pictures also of the items you're giving away if you can't get a written receipt from the charitable organization.
Yeah, at least this way you prove that you at least owned it at one time. That's right.
That's correct.
A good idea.
Mm-hmm. And as far as if you have, as I said before, any stock that you're giving that's short term, you should sell the stock and give the cash. Because this way, if it's short term, you still can write off the loss and still get the donation of your cost, so of the cash you're giving in. So that's the way that goes.
Okay, and how about for cash contributions? There's been a lot of talk straight from the White House about some changes about line item donations, and there's a lot of nonprofits and charitable organizations in our state, Roy, that are very nervous that they feel that now just the act of donating cash to charities and nonprofits is not going to be as simple as just giving away money and knowing that there's a certain amount you could write off. Are there some changes in the cash donation world coming up too?
Well, again, this is something that hasn't been passed yet. So what they're proposing and what the real world we'll see once they finalize everything. For the time being, all we can do is go by what we have in rules now and what we're subjecting ourselves for 2017. What normally happens if you're donating to a correct charitable organization, and if you go on to the IRS.gov website, there is a click list to see if the charity is acceptable, because there's some nefarious companies that call themselves charities, but they're actually not legal charities under the eyes of the IRS. And any donation that's given, you're supposed to get a letter from that the charitable organization of anything in excess of $75 as far as that goes, which will state what was given, the date, and the fact that there were no goods or services provided or given back. That's a very important line on anything that comes from a charitable organization, because if they are giving back some kind of goods or services, that reduces the amount of the donation that can be deductible.
Gotcha. I understand that. And I learned that just this week there are about 33,000 charities and nonprofits in New Jersey alone, Roy. So it's important that people do their homework, that's for sure. As we get ready to wrap up here, you've obviously been involved in this world for a long time. And I think one of the biggest criticisms that people have, whether it's citizens, the community, business owners, whomever, is that tax paperwork and tax returns and tax filing is just so darn complicated. Will it ever be simplified in our lifetimes, Roy? Are we going to see something that's just so much easier to do when it comes to doing the tax return the correct and accurate way?
The answer, Bert, unfortunately, is probably not, because there's too many outside influences. The supposed postcard tax return that the president was talking about, already from the initial bill that's been proposed, there's been probably about 2,000 different adjustments by one side in the House and another 1,500 to 2,000 in the Senate. So every time somebody wants to do a little bit of an influence, something changes, and that's where it gets complicated. The simple W-2 return, yes. I did want to mention something else that for New Jersey people,
sure,
if you don't mind.
Sure, of course.
There is a new veterans exemption in the state of New Jersey that will give you $3,000 additional deduction. If you were in the armed forces, served, and have an honorable discharge, What you need to do is send that along with a cover sheet, and you can look on the State of New Jersey Division of Taxation website, and it'll give you what you need. Usually it's the DD-214 discharge papers that says it's an honorable discharge, but there's other forms that you can use, and there's also a cover sheet. They're saying to send it in early because if you don't, it might hold up processing. But it's an additional $3,000 exemption, and that's the first time this year for state of New Jersey.
That's fantastic. Is that a one-time, or is that something
that
a veteran?
Ongoing, actually. It's once all you have to do is file it for the first year, the paperwork, and after that, it's ongoing as long as you're filing a New Jersey return.
That's fantastic. Anything that our state does to help veterans out, Roy, is certainly worth kind of waving a flag over. So thank you so much. Great speaking with you today. How does someone contact you for some more information about what we discussed today?
You can reach us at 973-992-9400. And also my email address is R as in Roy, Levine, at ljcpa.com.
Sounds good, Roy. Thanks for your time. Great information today, and all the best to you in the upcoming new year, and hopefully we could talk again soon, all right?
After the tax law gets passed, yes.
Yeah, we'll let you get out of tax season, so maybe you'll come out of the cave sometime in late April or so, right?
Okay. Very good.
Very good. Thank you very much. All right, Jersey